Hi everybody, this is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. Hey, good afternoon, everybody. Everybody who's joining us both on Facebook and also the webinar live, we're glad you're with us today. I hope you're enjoying this little bit of a bounce up in the market. Don't bet the farm on this particular move. We'll get into that a little bit later. Hey, if you're joining us on the Facebook and you like the content, hey, please like it and share it with your friends. At Active Trend Trading, we want to continue building the Active Trend Trading family. And so with no further ado, let's get on to the session for today. Okay, good afternoon. This is Dennis Wilbur with the Active Trend Traders for making money trading stocks, options, and ETFs. Joining me today is my son, Brandon Wilborn. Brandon, welcome.
Good afternoon.
Good afternoon. And Brandon's just joining. He's going to be joining us occasionally on these sessions, just basically to keep people updated on what kind of new things we're doing on the website, and also any of the new offerings, such as market action point offerings and or the current premium Active Trend Trading membership discount that we have going on. So Brandon, how are you doing since I saw you earlier this week?
Has it been that little time since
Yeah,
I saw you last?
That's right.
I'm doing fine. How are you?
I'm doing fine, son. Hey, all materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is no indication or promise of future performance. Here's a little bit about both myself and Brandon. You can come back and look at this when it is posted. I will basically get this posted. I try to do somewhere between 10 and 15 minutes worth of the session. And we go here and look at there we go. What I ask folks to do, if you have a comment, please just leave the comment in the chat window, and that way I will have a better chance of seeing that. Brandon just came back and joined Active Trend Trading. He used to work with me after he graduated from college, and then he's gone on and went to seminary, and then went on to get married and and his wife had a couple of kids, and just now they're up in Boise, Idaho. So remember that discipline is the key that turns knowledge into wisdom. The objective of this session, again, I want to keep it short. I want to keep it sweet. 10 to 15 minutes, timely, actionable intel review at the end of each week. Today, I want to spend a little bit of time focused on what's going on with this downtrend. Okay, we are in bear market territory, and so the indexes that are in a downtrend in bear territory. Be patient with the retracement rallies. IBD, Investor Business Daily, just did a really good article this past week, and I'll show it to you here shortly, but it talks about the legs down or the waves down that tend to be typical of a bear market. And in reality, we've just had one leg down. There could be as many as 2 to 3 more legs down. Normally in the session, we take a look at stocks, ETF performance, and then we'll be looking at bonus trades, primarily offering opportunities in LABU and LABD. Of course, if you want the text alerts and the premium alerts on what we trade with Active Trend Trader, hey, just become Active Trend Trader members and we'll get those out to you, both in text format and messenger format. here is what the markets are doing so far. As you can see, the Russell still down in bear market territory. The Dow made a really good bounce today, but still is down for the year. And S&P slightly up, NASDAQ slightly up, NASDAQ Composite slightly up, Russell. And then here we have the how far they are off of last year's highs for them. And this is the session I wanted to kind of basically highlight to everybody. And what this is this is from an article in IBD 50, the IBD, and it talks about these two bear markets. They form waves. And here's the one, and I encourage you to go back this weekend and study these particular bear markets. What it showed up is here, the first wave back in 2008 to 2009 was from October 2007 to March 2008, dropped 20%. Sounds kind of similar to what we're currently going through right now. Then we had a rally back from March till June 2008, had a rally. And the thing that I want you to remember in a bear market, the rallies, the snapback rallies or retracement rallies can be basically quite large. Oftentimes you get a larger short period move to the upside in a bear market than you do in a regular bull market. So, but the retracement rallies can be really exceptionally violent and also very unpredictable. So we want to be basically watching for those. Look to be if you're going to try to trade this, I am looking to trade it more or less to the downside until I get a confirmation signal that it's ready to move up into that relief, into that retracement rally. So I'm going to be talking just really quickly about what does a proper bottom look like. And also the Fed. What's the Fed got to do with what the market's doing? Part of the issue is the Fed came out, the Chairman Powell came out today and basically said, well, I'm not going to retire and I'm not going to quit just because Donald Trump wants me to quit, blah, 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 and all that type of stuff. But the thing that's very interesting is the Fed's mandate is to basically try to maintain as much as possible a Goldilocks type of economy. Hence, not too much inflation, control the economy overheating or cooling off too much. Unfortunately, what happens is the Fed is working off of data that's about 90 to 120 days old. What does that mean for us? It means that in a lot of cases, other actions in the market, such as the big downturn in oil over the last several months, has actually almost wiped all the potential inflation off the board. And so the Fed's trying to fight inflation that will probably never and not happen. So just be aware of that. And so they also, because there's a lag time between their data when they get it and when they make the decision, therefore they can be behind the power curve making decisions on what's going on with the market. So let's take a real quick look at what does this these waves down and in the index. And I'll go over here and I will have to do a different share, a new share. There we go. And we'll come back to the, there you go. You should be looking at a weekly chart of the S&P. Are you looking at a weekly chart of the S&P? Brandon, can you see the weekly chart?
Yes, I've muted myself just so I didn't,
Okay. So the two periods that were highlighted in the chart in the slide I just covered was basically here's the 2000 to 2003 bear market, and what it's talking about basically these legs down. Well, basically it went down, rebounded. Okay, this is a basically a retracement rally back up into the moving averages, drops, retracement, drops again. And I think in 2000, Yeah, 2000, 2003, there was 4 legs down. 1, 2, 3, 4. Let's highlight over here and just hone in on 2000. Here's our period in 2007. And the first leg down started up here. Let me click this out just a little bit. There we go. First leg down started about October of 2007, which is about here, drops, okay? Drops back down to here. Relief rally or retracement rally back up into the stronger moving averages. And remember, this move from here to here, my friends, is this move on the S&P was about a 14-15% move. So just be aware of that there will be tradable rallies within a bear market. We just have to be careful about how we take the trades on that. Then finally, we get a second leg down from here to about November timeframe here. Another retracement rally back up into the moving averages. This time it gets up about the 8-week moving average and then drops again where it finally puts in its next lower low. Look for the signs of reversal, the positive signs. And what are those positive signs of reversals? Is one, what do we have? Lower low, but with positive divergence on the TSI, and or we get some double bottoms here on the market forecast. So look for that. Similar thing happened up here at the first reversal back up into the moving averages. We came down, made a new, slightly newer low, positive divergence. And so hopefully on a weekly and a daily chart, you'll be able to see those items to be able to make a decision off of. So that's what they look like. You can go all the, I encourage you, go all the way back to 1929. If you're a think or swim person, you can, expand your charts to cover all the data on the Dow and the S&P going back all the way to 1929. Take a look at what the bear market did then. And then that'll give us a really good picture for, okay, that could be basically give us a better picture of what to expect. And so, yeah, thanks, Joe. I'll look at modifying the green candles. But if you could tell it was green, that's a good thing. And so, hey, let's take a real quick look at what are we looking at right now for the markets. Okay, in reality, compared to 2007, 2008, we basically have just had a 20% drop. So that we can consider this the, perhaps the first wave down. And we may be getting price action right now that's going to be, correspond to the first retracement rally back up into a level of support, and then watch for us to reverse back down. Where's it likely to go? Well, we had a strong level of support back here about the 1800 level, a little bit of strong support here at the 2000 level. If I expand this out just a little bit more, is it going to get all the way back to the 2008, 2009 lows? Probably not, but we've got strong here at 1800, and then strong down here at this low here about 1100, 1120. So who knows? 3 legs down may take us down to that level. But again, I'm looking for a bounce as a relief rally back up into the up into the these levels here, a reversal off of that, and a drop. Of course, I have to expand that. There we go, to about that. I like the 2200 level. Right now, they're talking about the Fed is defending the 2400 level. We'll see if that continues. They called that the Powell put zone, 2400 on the S&P. So anyway, I wanted to highlight that to everybody so that to let you know, yeah, we can be buying this low here, but we just want to be very, very cautious that this may not be the final low, and it may take a nice little retracement, because if we go from 2,400 to 2,600, that's a 200-point move on the S&P, which would be a nice sizable gain. So let's go back to, and we'll wrap things up for really quickly. Wrap things up. There we go. So I hope you like that, and I'll be going into this a little bit greater depth. If you're a Bay Area Moneymaker member and have paid your dues, we will be going into this a little bit more depth starting at the BAM meeting, BAM webinar tomorrow. So active trend trading, here's our performance for the year, 21% to 69 and 50. Turned out to about 36.9 combined return on the $100,000 that we started with. As you can see, the Dow and all, the Russell, well, everything was in the red on the indexes themselves. And I just want to remind you that I did a presentation on the active trend trading system, and this is one of the entities we trade. And what I'm looking at, basically clarifying, simplifying so that everybody can multiply, is we're honing on some specific ETFs that move a lot during the year, but give good signals. And so here's an example of LABU, the compounding effect of just these three moves turned out to be about 232% over the year. And I recognize you're not going to get all this gain here, but these are the kind of entities I want to have our members exposed to opportunities for 100% gains, even if regardless of the market conditions. And so that's what that's all about. And so, hey Brandon, I'm the membership opportunity that we had going on for about a month and a half ends on the 6th. Close of business on the 6th. There's a 40% discount off our regular rates. I know, Brandon, you've been doing some really good work on, what's the value of an active trend trading premium membership?
Well, it depends on how much people think your time is worth per hour. So.
Oh, okay.
If you look at it from a perspective, if you're going to be getting investment advice, usually you're getting $300-400 an hour, right? For
right.
A lawyer or any type of professional level, and you're talking about ATTS membership. You're talking several hours of your time per week getting very specialized knowledge and education.
Right.
If you broke it out to $300 or $400 an hour, you're talking hundreds of dollars per week in value. And then there's the archives that are behind that are kind of, it's hard to put a number on that. What depends on what your personal account looks like on the value of the trade alerts. Because, if you've got a $10,000 account and the trade alerts make you 20%, that's a couple grand. If you've got a $100,000 account and the trade alerts make you 20%, that's 20 grand. So that's a bit more subjective. But those trade alerts, just from a your time perspective, are definitely worth over $100 a month. Okay,
and so hey, and I know that we've been working on getting the market action points service launched. That's the one that's going to trade the leveraged index ETFs. Do you have an update on when we'll probably be getting that launched and open it?
Yeah, we've been diligently working away and both in trying to get those early results for the previous members of early warning alerts as we've turned that over into this new system, and also developing all of the background stuff to make it a valuable system for people. But I know we originally were looking at a launch in the fall, but I think we're closer now and very likely to be able to launch that this month.
Okay, excellent. So if you are interested in becoming a premium member, hey, just go to this website here, activetrendtrading.com/premium-membership-special. The password, because I have this locked up, The password to get into this special is bonus. And it's a month-to-month membership. You can cancel at any time with no obligation. Remember, we have BAM meeting tomorrow, 9 o'clock California time. And then, again, we're continuing our streaming webinars on Mondays and Fridays for Facebook and the regular free webinars. And then for premium members, we, of course, have our technical training on Wednesdays. So with that, I just
if I could just,
yeah.
Hey, Dad.
Yes, sir.
The couple slides ago, right up at the top, it says there that if you join up now for active trend trading or MAPS, when it's going to be first laid out, it's going to be on a special price. But for active trend trading, it's on the top of the slide that your prices will never go up. And I just want to mention part of what we're doing this year is increasing the value of active trend trading by having better, more packaged training on the core system that's going to be available for people. You're going to get all those updates if you join now and not lose out just because somebody knew down the road when prices have gone up because the value has gone up. They're going to be paying more down the road. But if you join up now, you get those benefits once they're released. Okay.
Don't remember. I always remember that and one of the things I pride myself in doing since we started active trend trading, back in 2012. Some members who joined back then, I never raised the prices from the time you join. In other words, if you join at the $44.99, as long as you maintain an active membership, it never goes up. And it's the same way and we've had multiple price increases since we first got started and introduced some of our introductory offers way back, 6 years ago now. So, okay, Brandon, thanks for joining me. And so
you're welcome.
Okay, Ben, I was just looking at some. If you're a premium member, you can basically I'll be recording the next session, and it's how I'm setting up the trades for strategy number 3, and so it will be recorded, and our email will go out for you on catching up with that. So keep the A growing. 2019, I'm looking at as a year of completion. You can contact us at Facebook at Active Trend Trading. Or Twitter at trend_DWW. And of course, we'll be doing the premium members next final hour at the top of the hour. Brandon, thank you very much for joining us. And here from Hawaii, aloha, trade well, and prosper. I'll go back one. God bless everybody. And thanks for joining us today, Brandon.
Aloha.
Everybody else. Aloha.